Hey there, welcome to Fund to Money. From April 1, 2023, an important change is getting affected as far as taxation of investments in gold through mutual funds is concerned, and this basically pertains to units held for 3 years or more. In the past, any capital gains you made on them, they were considered as long-term capital gains, and obviously they had to pay a long-term capital gains tax. That was 20%. It's a concessional rate when you compare it with the 30% income tax rate, the peak income tax rate. For anybody who's in the highest tax slab, it was a lower rate, but the second benefit was an equally important benefit. These units, this 20% tax happened after the units got the benefit of inflation indexation. Basically, the movement of inflation index, the proportion in which inflation moved during the period of investment, the cost of buying units was raised accordingly, and on that 20% long-term capital gains tax happened. So for anybody who was in the 30% tax slab, this was a significant sort of benefit. Now what's happening from April 1, 2023, this benefit is no longer there. It's been done away with. So what basically is happening is that regardless of how long you hold your mutual fund investments, basically gold related investments we are talking about, whether it's gold ETF or any other investment related to gold, is that the capital gains is going to be taxed at income tax, your relevant income tax rate. Before, this was the treatment for units you held for less than 3 years. So if you in the past you held units for less than 3 years and you made gains, you paid tax according to your income tax slab. Now this has been extended to any tenure of holding investment you hold. So basically what has happened is the tax benefit that you got is now removed. So you're basically, for even if you hold an investment for a longer period, you're going to be paying a higher tax. So logically, if you look at gold in terms of returns, in terms of investments through mutual funds, you would feel that it has become unfavorable just purely on the basis of returns. However, we're going to argue that when you're looking at gold investments, this treatment, although it's a very convenient way of investing in gold, whether it's through mutual funds, including gold ETFs, this latest change makes no difference in your approach. You should not be bothered at all, because gold plays a particular role in your investment, in your portfolio, and that approach is unaffected by this latest change. And you had alternatives, far more appealing alternatives even before this change, and that they continue to be attractive. They have even become more attractive, and as a result, and because gold investments, there's only a limited amount that you should be investing ideally, not more than 10% of your overall investments. So this latest change in taxation as far as gold related mutual funds are concerned should not make any difference to you, and you should not be bothered at all. So to get to know the details, you'll have to wait a little longer. We'll be coming back with the details on the other side. Don't go away. Welcome back. Welcome to Fund to Money. We are discussing why the latest changes in taxation of gold investment made through mutual funds. We are talking gold, the commodity, and mutual funds making investments, those investment options. Why the recent changes, which is basically related to long-term capital gains. What was previously considered as long-term capital gains, basically units held for 3 years or more. Why the changes in their treatment? Basically now you will have to, regardless of how long you hold the investment, you'll have to pay according to your income tax slab. So why the changes that have happened, why they should not be making any difference to your overall investment approach, your alternatives, and so on. So let's get on with some of the details. So as far as existing investments are concerned, they'll continue as far as when we're talking existing investments, we are talking about investments made till March 31st, 2023. So they will continue to enjoy inflation indexation benefits and long-term capital gains tax of 20%. So that benefit will continue. Now, in terms of fresh investments, what should be your approach? And the first thing that's worth discussing is what role should gold be playing, should play as far as your overall investments are concerned. So in terms of overall investments or your overall investment strategy, gold is not supposed to deliver growth to you. It's supposed to deliver stability to you, especially in years when both your equity and debt is not doing well. So equity funds are experiencing fluctuations or any other hassle, debt funds are experiencing hassles. Gold comes in and lends a helping hand. It's a calming hand and helps stabilize the returns a little bit, calms things down, and year on year its presence ensures that you have consistent overall returns. Remember, it's consistent high returns that will help you save large amounts. So you might have large overall returns, portfolio returns in 1 year, and you might be down in the dumps in the next. That's not going to help you. What will help you is consistently a high performance, high returns over a period of time as much as is possible. That will help you save a significant amount over the long term. So that's number one. So that's the role of gold. It's more like a stabilizer rather than a growth engine. Second is, because it will never be growing as fast or as well as equities, therefore experts say that's been borne out by past experience. So experts recommend that you limit your investments, overall investments out there, to 10%. So 10% of overall investments is what your goal investment should be. Therefore that means you need to be, these investments are for the long term. And the third role which gold investments play is basically they help combat inflation. Experience has told us across the world that they just about manage to match up with inflation in the long term. So that's the third role. Now, if this is what's going to be the role of gold, and the tax treatment that has happened as far as mutual funds are concerned, sovereign gold bonds, which already had an edge over mutual fund investment, gold mutual fund investments, basically mutual funds that are investing in gold, not gold shares of gold companies, right? So we are talking about those basically gold ETF kind of investments. In that case, what's happening is sovereign gold bonds already had an edge, and now with these latest changes, that edge has only become even more. So you should be looking at sovereign gold bonds for fresh investments. And what are the three most important things which give it an edge? Number one, you hold it till maturity, it's tax free. So on tax basis, they absolutely deliver a knockout punch. Then there's a assured coupon payment as far as sovereign gold bonds are concerned. You don't get that in mutual funds. So again, that's even a greater advantage. Third is, yes, you can make an exit. There's a certain limitation in exit, but you can take loans. After you have to remain invested for a certain period, and exits, you can move out, etc. But as far as liquidity is concerned, you can now take loans against sovereign gold bonds. So that liquidity issue is not such a big deal in any case. But as far as, if you look at it from pure investment point of view, sovereign gold bonds have an edge. So even before these changes, sovereign gold bonds had an edge. Now they have the edge has become even more, and you should be looking at sovereign gold bonds from now on. So we hope this clarifies things. You can clearly see the tax changes haven't really altered the landscape. The focus, the competitive landscape is the same, and you should be looking at these alternatives. The way you look at gold has not changed, and it will remain it'll continue to play the same role as it did in the past. So we hope this clarifies things, helps you reduce any bother that might be coming in your mind, and we hope you like this presentation, you found it useful. If you've liked it, hit the like button and share it with others. Till the next time, take very good care of yourself and goodbye.